Breaking news, America's national debt just crossed $38 trillion. Interest payments now exceed the entire defense budget. And here's what they don't want you to know. We've seen this exact scenario before. Back in 1933, the government seized private gold at $20 an ounce and immediately revalued it to $35, erasing real debt overnight while devastating anyone holding paper currency. Well, today, U.S. gold reserves sit on the books at just $42 an ounce, while it's trading well over $4,000 right now. Analysts are projecting a strategic reevaluation. You ready for this? $20,000. Meanwhile, silver is entering year 6 of supply deficit, with banks sitting on derivative positions that could trigger billions in losses. And the BRICS nations, remember them? They've increased their gold reserves by 102%, while the West adds nothing but paper gains. The pieces are moving. The playbook is open. And joining me now to expose what's really happening is Collin Plume, the CEO of Noble Gold Investments, returning. Collin, $38 trillion in debt, $900 billion in annual interest payments. What options does the government actually have left to do?
Yeah, there's not a lot left. And you talked about 1933 and what happened then. And basically what happened was the government came out in the 1920s and said, good gold price is going to be $20. Everybody should turn their gold in. Don't worry, we're going to pay you full on this gold. And then next thing you know, within a few years, they revalue gold to much higher price, $33, $34 an ounce. So everyone that turned their gold in at the $20 price, they lost 30-40% in value within a few years. I think we're in a similar situation today where the government is trying to get us comfortable with the dollar and derivatives and all of these things that are happening out there. But the big market is saying, no, we want just real gold, real ounces, not paper. That's really been the theme of this year for me as someone that's been in this business for 17 years. The thing that I've learned the most this year is that everyone's saying is stay away from derivatives of gold, stay away from COMEX. Even the biggest companies in the world like Fidelity and JP Morgan, they're getting out of paper. JP Morgan sold a very large short position that they had on the books for over a year, and they immediately turned that short position in silver into physical silver. And so that's I know people are saying like, oh, it's okay, ETFs, and we're just going to continue to see things happening. But if you really look at what the larger players are doing, they're not sitting in ETFs anymore. They're actually buying physical metals, physical gold, physical silver. They're moving away. They're taking possession. And this market, if we think the price has gone up a lot, which it has, but if you look at this is one thing that I always think about is that there's only 2% of contracts in COMEX that actually get delivered in physical right now, 2%. If it went to 5 or 10%, 10% of the people wanted their physical, they would not be able to get it right now. And that would cause hysteria in the market. So you and I have been talking about these numbers of, ETFs to actual physical of 280 to 1 or 300 to 1. We've been talking about these numbers for all these years, and it never really made a difference. And people have always said that COMEX and LBMA was created to suppress the price. This was the year that all of that suppression came unglued because the biggest players in the world, the central banks, the big institutions have said, no, we can't trust getting a paper contract anymore. We actually do need to get physical delivery of the metals. And that's why you've seen premiums.
It's like a bank run on gold. But the banks are doing the running and not the people on the bank accounts.
But they're telling people it's okay to take the paper. It's okay to take the digit. It's okay to do it that way. They're not giving people the confidence or they're not giving them the real information that they're actually not confident in the paper. They're not.
Well, that's why you're here, Collin. You're giving us the real information that people aren't talking about.
Yeah.
So let's go back to 1933. I want you to walk us through the playbook. Roosevelt seized gold at $20.67 an ounce, and then they reevaluated it overnight.
Yeah.
So how did that wealth transfer actually work? Because you're seeing parallels.
Well, gold was money then. So people actually had their money in gold or they used dollars. But a lot of people didn't trust it. They kept it in gold. And so the government basically they pulled the fast one. They basically created so much value for the government and so little value for those people standing in that line, right? They basically pushed the price up to what it actually should be. And that's what people are saying is going to happen today. That's what they're talking about, this revaluation, that they may say like turn in your gold, or they may do something strange with the dollar, but then the true value of gold is going to be $15,000 or $20,000 an ounce. So anyone that sells now or gets out of it now would miss all that potential huge gain.
Wow.
And that's the thing that I think you're sort of talking about and addressing, is that we have to be careful of what's being said out there. The European Central Bank, and we talked about this earlier this year, they came out with a document. Their four biggest economists.
I remember.
They said that the biggest issue that you should be afraid of is getting gold and silver in paper. And this was in January and February. This is a central bank. This is the Euro's central bank basically saying, beware of having contracts, right? And they were right. They were 100% right, because over this year, as the price went up, COMEX and all these companies, they needed to get physical to try to catch up. They were paying at one point, I think within a month ago, China and large corporations were paying 30% above the spot price to get the actual physical, because they didn't have it. They had to pay a premium. And so that just led the price to continuing to move up. So we're seeing this new idea that people aren't okay with the derivative version. Now, also what happened in the late 20s was you had the big stock market crash in 1929. And I've actually been studying that for the past 10 years. And one of the biggest elements of that crash was that most people, everyday people, were leveraged on their stocks in 1929. A lot of people aren't aware of that. A lot of people, I think they thought that this whole idea of leverage came much later, but actually it was something that was introduced in the early 1920s. So most average Americans weren't just buying stock, they were leveraging. And so when the stocks went sideways and went down, they lost everything. And the only people that survived were people that either had the means, or people that had liquidated, or people that actually just bought the whole stock unto itself. Now, even though they had a loss, it wasn't as bad as if you're in a leverage. For anyone that understands being in a leverage position, you can, depending on how you buy the contract, you could lose your entire investment. And that's what happened in 1929. So you had the stock market collapse in 1929. People lost everything. Then you had the gold revaluation in 1933. So you had these two dramatic events where regular people lost everything, and then the government was able to win by creating this new value. That in 1929, Andrew Ross Sorkin, fantastic book, by the way, for anyone that is looking to read. Even Charlie Chaplin is mentioned in the book. He was a big stock investor, and his stock advisor advised him like the market's never gonna drop, it's never gonna lose, and he was very questioning of his portfolio, of his guy, and of course they lost money, and then he called him after and he said, I thought you told me this is a no lose situation. So he's referenced kind of early in the book. But yeah, I think when you look at what happened then and what's happening today, it's a very similar dynamic in that you have the stock market at an all-time high. You have a lot of people over leveraged right now. People are, I mean, you look at the average American. I mean, they're saying that even a person making $300,000 a year is still living. There's like 30 or 40% of them are living month to month. It's because like people have just they've moved. They're spending so much. They're trying to keep up so much, and they just can't keep up today. And the government's doing the same. I mean, people today are just mirroring what the government's doing, right? I mean, we're all just spending as much as we can, unfortunately, and that's the society we've come into. But unfortunately, we can't keep up, and that's the real issue that we're having. And I think that's the big problem today in our economy, is that it's just become a situation where we've extended too much.
Okay, let's talk about the U.S. gold reserves. Okay, they're on the books at $42.22 an ounce.
Right.
Market price is over $4,000.
Right.
And there are some analysts actually floating a $20,000 ceiling.
Right.
I mean, that's insane. Just where we're at today, where we were a year ago, at the beginning of the year, you mentioned the interviews we did then. and we've been talking about this, watching the gold price just rocket.
Right.
Is this a strategic revaluation? Is it actually being discussed? I mean, are we going to see $20,000 gold? I mean, it's like it's almost ludicrous to consider, but when you think about where silver is now and where it was, a year and a half ago, like I would have told you were crazy. But I mean, you've been predicting this forever. You have your book there. You've been talking about it. Silver's the new gold, so or the new oil. So anyway, answer the question: is this really going to happen?
Yeah, no, I don't think it's that far fetched that gold can hit $20,000. I think that since you and I have been talking, doing interviews for the last almost 9 years. I mean, when we started, gold was sitting at about 1,250, $1,300 an ounce. So yeah, it has gone up. It feels like it's gone up a lot, but if you think about the cost of everything you buy day to day, I mean, everything has gone up substantially relative because the dollar has lost so much value. I mean, that's really what it comes down to. Is gold going up, or is the dollar losing that much value? I think,
Yeah, that's a real concern.
right. I mean, any way you slice it, that's really the thing that people are seeing today. And I think, as there's more turmoil, as there's more, bumps in the stock market, and I think we're going to see more bumps in the stock market. I think it's been artificially inflated, similar to, I think that the gold and silver market has been artificially suppressed. I think that it's gone the other way in the stock market. I think over the next 12 months, I think we're going to see a little bit of a pullback in the stock market. And I think part of it is that we're in a situation where companies, their PE ratios do not match up with their earnings. And so when do we see this big correction? And I think in the next 12 months, that's my prediction for next year. We will see a correction in the stock market in the next 12 months in a lot of the major companies that people own and people have been seeing. And I think people won't be surprised by it. You won't be surprised if NVIDIA pulls back. You won't be surprised if a lot of these big tech companies pull back. They don't seem like they're growing the way that they should be, and yet the price continues to go up. So $20,000 gold, I think, is a realistic number. Silver's up 100% this year alone. When my book came out, Silver's the New Oil, I made a prediction for silver this year. And this book came out December of last year. So within 12 months, I predicted silver would break $58 an ounce. And it's at $63 today. And really part of it was just math. I mean, the gold to silver ratio was above 100 to 1. It typically doesn't stay above 100 to 1. So now it's pulled back. I think we're at about 70 to 1 gold to silver ratio. So that was another thing. But we've had a shortage of silver for 5 years in a row. We've had 150 to 175
Okay.
shortage.
So that's why I want to ask you, because silver's in year 6 of conservative mining deficits.
Correct.
Solar, EV, all that demand is like just devouring the supply.
Correct.
Technical patterns project 95 to 250.
Right.
So what is driving this? I mean, you're like the prophet of silver here.
Well, AI, I think AI too. Like if you look at those data centers.
But why is no one covering it?
Yeah, I think it's not as sexy as some of the other investments. Right? I think that's what it comes down to. I mean, we're a commodity, and so like, is oil sexy? I mean, I think some of these things just aren't sexy. And speaking of oil, silver was 2 weeks ago was higher than oil for the first time ever in history. So I'm sure there's a chart out there that shows that, but the spot price of silver, I don't know where the oil price is today, but the spot price of silver was 62 and the oil price was 60, somewhere around there about 2 weeks ago. It could be still in that range today. I just haven't checked it. But in essence, silver is replacing oil in a lot of usage.
That's insane.
And that's something that will continue to happen. I'm not saying oil will go away entirely. I don't believe that to be true. But if they can use silver as an alternative, because a lot of people believe that we're at peak oil, right? And I talk about this in my book, is that there's a point where.
Well, I think peak oil is bullshit, though.
You don't think there is a peak oil? coin?
No, I believe that it naturally regenerates. I
Okay.
don't
Well,
believe
then,
I don't believe that.
and you're right. That could be true. And I hope for us that's true because we live, we're living to some
Yeah.
extent on oil. But if you look at like other usage like AI, and the thing that I think about is even if 95% of AI doesn't work that they're testing that's in R&D today, the one thing that will work, well, they will need data centers because that's the one usage that's not going away anytime
Right.
soon. And what is used in data centers? Silver
Oh,
is,
silver,
yeah, it's
silver, gold, the precious metals that are required to build those boards. I
correct.
mean, the size of the data centers that Elon Musk is building right now are insane.
Yeah.
And if you look on the screen, this is a post I just found. Um, real money silver is now 63.79 an ounce, and you're looking at these are silver dollars from back in the day.
Hmm.
Silver $1, okay, and that's what they had in those coins was real silver.
Yeah.
I mean, that right there is the perfect representation of the just the massive uh, wrong valuation, I guess, is the word
Well,
I'm
yeah,
looking
because
for.
if those are silver and those coins, those are older silver coins. Those are could be Morgan dollars or something else. But let's just say, like those even are trading above the spot price. Those are probably coins that are worth $75 a coin.
Wow.
So if you had kept those in that form, you'd be even above that price, right?
And I mean, but now we're obviously talking about numismatics in
Yeah,
this sense here. So
right,
there's another value add to it.
right.
But I'm from the melt standpoint, you
From the
know,
melt standpoint, yeah, then you're talking about just $63. But yeah, I mean,
right.
that's and that's that's really something to be uh, conscious of is that like that was our money. That's when we had gold and silver in our money, everybody was wealthier. Everybody was wealthier, and you cannot deny this. If you go back to the 50s and the 60s and 70s, we still had silver coins, right? We still had silver in the coins.
Yeah.
People were wealthier. Even if you go back in the early 1900s, as much as we had a lot of boom and bust, right? We had World War One, we had the Great Depression, we had all this stuff, but there was pockets there where people had tremendous wealth because gold was actual real money, and it kept our government in check. It made it so
Yeah.
that the government could not overspend.
Right.
Now it's a game of leverage and assets. That's and actually, I do think that's the name of the game going forward
Well,
forever.
you bring up keeping the government in check. It's like it reminds me of the fact that once the Federal Reserve was created, they could print endless money and they can create
Right.
endless wars.
Right.
Um,
Is how you
and
pay for the wars.
yeah, here's the message on the screen. Silver hits record $64 an ounce, tops oil.
Right. Correct.
That was 24 hours ago.
Yeah, and that's the energy, right? It goes down to where the energy we need. Everyone needs energy to keep the lights on and to move this economy. So and that's the thing about AI is like I think about it as like it's it's the AI. My analogy to AI is very similar to the gold rush in that my 9-year-old son Max always says this, and I taught this from a young age. It was like it isn't the people panning for gold that get rich; it's the people selling the shovels. I think the AI revolution, the people that build the components and everything around AI are going to stay wealthy and get more wealthy, whereas 95% of the ideas in AI are going to fail. So there is going to be a small percentage that pick an idea and it's going to work. But they're already talking about a lot of the R&D in AI is not working. It's failing. So if you invest in that, it's a zero sum game. You're out. You lose all your money. However, if you invest in silver and they're going to need data centers and it's going to grow, no matter what's going to happen, you're going to
Wow.
continue to go up in value. They're going to continue to need silver because
Who
it's
would have thought? I mean, you did. I'm just like blown, and my mind is blown that silver is up this much. And if just 1 year ago, if maybe somebody had a time machine and they could go back in time and they could invest a little bit, right?
Yeah,
Or if you had a sports almanac, right?
yeah, exactly. Well, and it's yeah, and I think about when you think about,
Oh,
if you look at my book too on Amazon, you'll see, and part of the reason I wrote the book is everybody writes about gold, and then some will write about gold and silver, but almost nobody writes just about silver. If you look at the top 100 books in commodities, I'm the only book in there that's talking about silver, and I
that's
and I
awesome.
and I think it's a big thing that people are missing. I think we always joked it was the redheaded stepchild for so many years. Uh,
Yeah.
the silver bugs are winning. And listen, could we have some turmoil here? Some sell, of course. Are they going to try to manipulate the price and create a harder market for traders? Of course, they're going to do those things. But long term, unless they can find a less expensive metal for EV, solar, data centers, unless they can find something else that's less expensive.
Well, look what Colin. They just stopped printing the penny.
Yeah,
Okay, the penny was costing too much to print,
right.
to mint, and now what happens?
Yeah.
It's gone. I mean,
Well,
of course, the nickel's next. I mean, that just shows you that even the stuff that they were making it's worthless.
yeah, and that goes with the other thing I think will happen in the next 5 years. I do think it will be there won't be enough silver to mint coins and bars. I think eventually that they will go away from that, and whatever's in circulation will stay in circulation, because if a government needs silver, they will pay more than a mint, right? Because a mint, the margins are tight, they're small. Or if somebody needs it for an industrial, so they're going to pay more, and they're going to. I mean, the U.S. government deems silver a critical metal, so the U.S. government's going to pay more, right? They're going to pay more than the U.S. mint. They're going to pay more than a private mint or any of these mints all over the world. So they will pay more. So I believe in the next 5 years that many of the coins and bars will be gone. And I wouldn't be surprised in 5 years if the US Mint goes from making, a lot of silver eagles to a very small amount, if not none. So I think eventually whatever's in circulation,
Wow, you really think they're going to stop making the silver eagle?
I think it's going to be hard for them to. I think they're going to have to
Mhm.
use it. Listen, if they're deeming silver as critical, is selling a commemorative coin critical? I mean, when we go to war,
Yeah.
everything goes to the army, right? Everything goes to the military. I mean, Ford was was helping make, things for the government during wartime. So I think eventually silver will be so critical that they won't have enough, or it'll be just too expensive and it won't make sense to make that. So I think there will be a point that the silver, all the silver that's out there that's minted will be minted, and then whatever's traded is traded, and then the rest will be used for industrial.
Okay, so let's go to the BRICS nations now.
Correct.
They've increased gold reserves. A lot of people, we haven't talked about BRICS in a long time. It's kind
Yeah.
of gone under the radar since Trump's been in office, but they've increased their gold reserves by 102%, and that's since 2020. The West added 12%, all from price appreciation, but zero new ounces. So,
Right.
what does this tell you about how the world views the dollar?
Yeah, they have zero trust in the dollar. The reserves in U.S. Treasuries in the same time period went from 71% to 56%. So they're selling their bonds and buying gold. That's the straight. They're trading one paper for assets, which is what I always tell people when they're always, people will always say, since I've been in the business 17 years, I wish I bought last year. And I say, you're just swapping a paper in your account or in your pocket for a physical metal that has a limited supply. That's what you're doing. So you could look at it, whatever you want to look at it, but the price is a reflection of our debt. It's a reflection of our dollar. So if you believe the dollar's getting stronger and our debt's going down, don't buy gold. But if you do believe our debt's going up, and if you do believe that the dollar's going to lose value, then you're just swapping one asset that's losing value to an asset that will eventually gain value over time. And you can't predict it, but it has to gain value over time, because there's a limited amount of gold, there's a limited amount of silver. So it has to gain value based on the world we live in today, because they need it. It's needed in industry. And so that's all you're doing. So you could think that keeping your money in the bank is safe, but actually I think it's actually one of the worst things you could do is to have too much money in the bank. Everything needs to be in some hard asset that you own entirely. And what the world has told us, and what the biggest investors have told us this year, is that if you can own an asset by yourself, do it. That's what we do at Noble Gold. You're not buying a fund, you're not buying leverage, you're buying the real thing. You don't have to share it with anybody else. Be selfish, be in charge, and be the boss of your retirement.
And then the link's down in the description for anyone who wants to take advantage of it. And of course, you've got these beautiful silver Christmas holiday coins
Right.
that you're giving away with qualified accounts. I'm a proud owner of one of them, and when I realized the other day where silver was, I told my audience, I'm like, guys, this is over $60 an ounce right now.
Yep.
I mean, I really used to discount silver. You know, I really did. I'm like, okay, silver is great. It's not gold, but now like with the gains it's made, outrageous.
I've been sending you silver coins since it was what, $13 an ounce. So they weren't a lot
Yeah.
to send them to you. But now, a thank you would be nice, but it's okay. It's fair. It's fair if you don't want to. I'm joking.
Oh well, by all means, no. I'm very grateful for all the precious metals you've sent over the years.
Yeah,
And you guys keep this show afloat. You know, even in our darkest hours, you stay through it and you hang out with us and you make it happen. So,
I love this.
your support is just absolutely invaluable to the Next News Network, and we're grateful. You know, we're grateful for you, your whole team, and everything you guys are doing there. And most importantly, though, what you're doing for our viewers. You know, when you come on here and you talk about these lesser known topics, it really helps people open their eyes to understanding what they're missing. You know, the subtext of the headlines, right? You really, it's great. The educational element you bring, but also the protective element that you bring by how you can steer people to save their 401ks before they get eaten up. And especially with the way that gold and silver is moving, it's like you got to move. You got to move quickly, or else you're going to miss the boat. Like if people took action on silver a year ago, they would be up like what, over 100%.
Yeah.
So
Yeah.
that's really the point. Is you can't sit on the fence. You have to move.
Yeah. Yeah. And like I said, you're just moving from paper to physical, right? And you're buying an asset that is necessary. And we will send you if you call us, I always recommend people to call. You can hit the link, mention that you heard us on Gary's show, but like, talk to us. We love this. We are going to make it fun. We're going to give you good information. We're not a high pressure environment. I'm the owner, founder. I've hired everybody there. Everyone's, family people. They all own gold and silver. They all do this every day. You're going to talk, and guess what? You're going to talk to a real person, right? I mean, I think that's a testament. We do business in kind of an old school way. In that we believe in relationships. We believe in talking to people. We believe in answering questions. That's our mantra.
That's why, like, when I do the reads for Noble Gold in our segments, there's been times where we're like, yeah, you're not going to talk to an Indian call center,
right?
All right, you're going to talk to real people.
Yep.
And like that cannot be understated. The value right there.
Yeah.
I mean, how many times have you called a place and it's just like a prompt, 1 for this, 2 for that? You never even get to somebody until you press 0 1,000 times.
Mm-hmm.
So,
yeah, everyone in Noble Gold. They're all patriots. They all believe in the cause. They're all fans of your show. I mean, we've been doing this for 9 years, and I will say, it's always a pleasure, and I'm happy to support everything that you're doing because I believe in what you're doing, Gary, and a lot of people, whether they know it or not, that have followed you on YouTube, you really paved the way for them to be able to have this freedom of expression on YouTube and everywhere else. And so I'm always going to be a supporter of what you're doing. I think it's great. I love, I love your team and I love your family and I love, and listen, it's not always easy. I mean, you've gone through it. You have gone through it and and you're better for it, right? You learned and sometimes that's what it takes in this game is you got to just fight through it. And it's been an amazing ride and it's fantastic. And I'm always happy to come on and talk to people. And we just want to build relationships. We're happy to give free information, whether you're ready to make a decision or it's the right time or it's early or you just have some time over the holidays to review some information. Like, give us a call. We'll send you out free information, and I think you'll
Shoot out the number real quick.
877-646-5347, and just mention that you heard us on the Next News Network, Gary Show. There's some good promotions for you that you'll get, and yeah, it's an amazing time of the year. But as Gary said, it's never too late, and it's a good time to learn about something maybe that you've been thinking about, or maybe you talk to somebody about it. Let us educate you. We have thousands of clients. We're just under $3 billion in transactions in gold and silver. So we've done a lot of transactions, a lot of happy clients. You can read our reviews. We have actually 80 positive reviews in the last 30 days.
Wow.
So you can go check us out. But yeah, no, I think it's a great time. And for everyone that's listening that is already a client, happy holidays and Merry Christmas. And thank you for trusting us with your
Collin, before we go, since you're the prophet of silver and you're right about where it is now, what is the move? What's the 2026 prediction? We're going into the new year. And just tell us. I want to hear it. I want to hear from the prophet himself.
So Jerome Powell's out in May.
Thank God.
There'll be a new Fed chair. The new Fed chair will be more aggressive in terms of rates. Bringing down rates means cheaper dollars, which should be good for gold and silver. And then what I've been saying for a year and a half, which I think is going to happen, is I think they're going to do some kind of quantitative easing. And if you think gold and silver have gone up a lot now, quantitative easing, the last time they did it was 2009 and 2011. Gold went hyperbolic, silver went gangbusters. So I think if those things fall into place, it could be a pretty amazing year. But a lot of it is just demand. The demand is happening from central banks, institutions. So I think you're buying, in a way, you're buying kind of insurance, right? So, whether it's, what percentage you decide to do is up to you. I can't predict where the price is going to go, for the next 4 or 5 years, except that I will tell you that I do think our debt will go up. I do think the dollar will lose value, and gold and silver are typically a very good hedge against those things.
All right, Collin. Hey, thanks for joining us today. It's always a pleasure. We look forward to having you back.
Thanks, Gary.
So, Patriots, you just heard the blueprint. $38 trillion in debt. No mathematical solution except the one they used in 1933. Revalue the gold. Debase the currency. Transfer wealth from savers to the sovereign. Gold reserves on the books at $42 an ounce while trading far over $4,000. Silver entering year 6 of deficit with banks exposed to trillions in derivative losses. BRICS accumulating physical metal at record pace while the West just holds paper. Central banks bought over 1,000 tons 2 years straight because they know what's coming. But the question is, do you know what's coming? Did you hear what Collin had to say? I certainly hope you paid very close attention. If not, go back and watch this all over again. And then I want you to visit nextnewsgold.com. It's linked in the description. I want you to speak with Collin's team about protecting your retirement before the reset happens. Do not hold paper when the music stops.